Engineer Gold Mines is focused on the exploration and development of the historic high-grade Engineer Gold Mine situated 32 kilometers southwest of Atlan, British Columbia. Engineer Gold Mines is fully permitted for surface and underground exploration with the drill program now underway. Engineer Gold Mines Limited trades on the TSX Venture Exchange, symbol EAU. For more information, please visit us at engineergoldmines.com.
You're listening to silverradio.fm. Available online at housestreet.com, talkdigitalnetwork.com. Welcome to silverradio.fm, podcasting in 0.99995. I'm Jim Goddard. My guest is John Rubino, author of several books on the economy, including The Money Bubble, his website dollarcollapse.com. He's speaking to us from near Port Angeles, Washington. Welcome back, John.
Good to be back, Jim. How are you today?
I'm doing great. Yourself?
Very well, thanks.
John, why is the price of silver climbing?
Well, it's, you can make the case that it should have been much higher than this, just based on fundamentals. So, one explanation is that it's just going back where it belongs. And, the other explanation is that we're generating higher and higher rates of inflation here in the U.S. And I imagine you guys are too in Canada because, you're a resource-based economy and resource prices have been going up dramatically. And that's really enough for something like silver. I mean, silver, wins both ways in that kind of an environment because it is a resource. It's an industrial metal, which is in ever higher demand, and it's a monetary metal, which means it responds to higher rates of inflation. So two different things are making its price go up right now, and neither one of them looks ready to abate anytime soon.
Do you have any long-term price targets for silver?
Yeah, I'm glad you said long-term, because, the short-term thing is completely unpredictable. But further out, it's easy to see silver going to between $100 and $200 U.S. per ounce. The math for that is pretty simple. Gold goes to $5,000 an ounce, the gold to silver ratio goes to 25, and voila, $200 silver. So I think the gold $5,000 thing, in U.S. dollars again, is pretty much baked in the cake. That would be at the very low end of my expectation for gold over the next 5 or so years. So it should just pull silver right along. But silver will go up more in percentage terms because that's the way it normally works in bull markets. The little volatile thing increases in price more than the big, more stable thing.
Is the value of the U.S. dollar a key measure for the price of silver?
Very much. As a monetary metal, silver is priced in U.S. dollars and kind of competes with the dollar. So if the dollar's weak, then just about everything we measure with the dollar goes up in price in dollar terms. And again, with silver, you get kind of a double pop because it'll go up like anything else will if the dollar starts to fall in value. But it will also, because it's an alternative asset to the dollar, it'll attract a lot of terrified capital if the value of the dollar starts to fall. So, silver should go up much more than the dollar falls. It won't be a symmetrical relationship at all.
Now, for those of us who are old enough, we remember silver mania in the late 70s, early 80s when the Hunt brothers tried to corner the market. And it bounced up to $50 U.S. an ounce in 1980. Adjusted for real inflation, what would the equivalent of $50 in 1980 be in today's currency?
Well, good thing you used the term real inflation because that highlights the fact that there are a lot of different measures of inflation, and some of them are very modest, and some of them are pretty outrageously high. But taking kind of a middle value, the real price of silver back then would be several times higher than the dollar price was. So for today's silver to go to an all-time high in real terms means it would have to be a couple of $100 an ounce. So we're a long way from silver testing its inflation-adjusted highs. Although, like I said, I think we'll see that in the next few years sometime.
What's keeping the price of silver relatively low?
I really can't answer that. It should be much higher than it is. But except to say that frequently things don't do what they're supposed to do in the short run. A stock just won't go up and won't go up and won't go up, but then finally it goes up to where it should be, or down to where it should be, depending. And it's the same thing with commodities. They can stabilize at levels that are really far removed from their intrinsic values, but eventually they make it to their intrinsic value, one way or another. And with silver, I think we're just seeing a long stretch of underperformance to be followed by a stretch of outperformance, to get back to probably the $100 or $200 an ounce is the intrinsic value of silver now, based on the amount of new currency we're creating in the U.S. and silver's previous inflation-adjusted high and its relationship to gold. You take those three things together. Oh, and the rising usage of silver in clean technologies like solar and electric cars, which is a new source of demand. Okay, so you take all that together, and the intrinsic value of silver could be argued to be $100 or $200 an ounce.
Should silver be having a much stronger reaction to the money printing inflation that's going on?
Yes, it should, but it's not so far. I mean, it's doing pretty well in the last couple of years, but it should be going straight up. It should be behaving like Bitcoin over the last couple of years or something, because it's that undervalued. But again, things don't move when they're supposed to move or when you want them to move. They move when they move. To be a successful investor, timing is less important than patience in a lot of cases. You get into something that you're reasonably sure is worth X. You can't know when it gets to that point. You can't know when it's going to go up to the thing you think it should go up to. But if you understand the situation and you're pretty sure it's going to make it eventually, then you just have to be patient. You get in and when it happens, it'll happen. But in the meantime, you just have to kind of do your best to relax in the knowledge that you understand the situation and it's going to work out. And I think that's the way it is with silver. It clearly wants to go way up from here, but you can't force it to go way up. It's just going to do it when it does it.
Where are we in silver's seasonality cycle?
The weak part. Usually gold and silver go up seasonally at the very end of the year and in the first couple of months of the year because of Asian buying. Indians and Chinese in particular like to have their weddings in the spring, and they like to give gold and silver jewelry as wedding gifts. So they tend to buy a bunch of gold and silver in December and January and February for processing into jewelry. And that tends to put upward pressure on the price of those metals. And then during the summer, nobody's doing anything with gold and silver in India or China, and so there's selling pressure, or at least lessened buying pressure. And so you usually end up with a few boring to somewhat negative months during the summer, and then it picks back up again in the fall. So it's really encouraging that so far precious metals have held up really well. They've actually gone up in the last couple of months, although today was a brutally bad day. Today being June 3rd, Wednesday. But so far it's been encouraging because of all the inflation and other stuff that's going on. That's been good for precious metals. But we should keep in mind that this is the weakest seasonal part of the year for precious metals. So if they're more boring than you expect, it's probably because you forgot that this is the 3 or 4 month stretch when they're usually really boring.
How is the gold-silver ratio looking?
Right now it's about 70, which is on the historically somewhat high but not crazy high side. Silver actually, or the gold-silver ratio, actually got up to the 120s for a while within the past year, which is to say it took 125 or whatever ounces of silver to buy an ounce of gold. That's crazy cheap. It's never been seen before. And it was a signal to load up the truck on silver, and in that time, since then, silver has outperformed gold dramatically, and the gold-silver ratio has dropped down to, like I said, 70, which is, it's still kind of a buy signal for silver. It's still high enough that you would want to buy silver relative to gold, but it isn't so high that you want to back up the truck and buy nothing but silver, like was the case when it was 125. This is not a screaming anything, the current gold-silver ratio, but it is somewhat favorable for silver.
Paper silver versus silver bullion versus silver coins. Your thoughts on that?
Well, there are lots of different ways to invest in silver or to buy and own silver. And it's really important to understand that some of them are actually silver and some of them are not. The ones that are not silver are these ETFs like SLV, which claims to track the silver price and claims to buy silver and store it in a vault. But there's nothing in its bylaws that require it to do that. So you're really an unsecured creditor of a company when you give them money in return for an unsecured account of silver. So you don't want to trust those things. They might be trading vehicles. Like if you get some inside information that tells you silver is going to go up by a lot in the next few days, well, first of all, don't trade on inside information because it's a crime. But were you going to do that? SLV might be a thing that you could use. Just buy it, ride it up for those few days, and then sell it. But it's not a long-term holding because when push really comes to shove, which is to say when there's a big financial crisis out there and everybody's trying to buy silver, you may not have silver if you just own SLV, and it may crash in price when that becomes known. The other forms of silver, like allocated storage, is okay. It's where you legally own some silver bars in a vault managed by an insured company. That's reasonably safe. But the safest is actual physical possession of silver coins. Say you go to the local coin dealer and buy 10 silver maple leaves or something like that and bring it home. So that is, nobody else has to keep a promise for that to be real silver and to behave accordingly going forward. So that's the very safest way to own precious metals, although nothing is 100% safe. Your house can be robbed, you yourself can be robbed. So you need to kind of think about the different ways that you can own precious metals if you want a big precious metals position, and maybe diversify a bit. Have some stored, put some in the safe deposit box, although that's not 100% safe. Keep some at home for use if society just kind of collapses around you. Then you've got some money you can spend. And then maybe store some in another country via a secured vault arrangement. That's the allocated gold I was talking about before. And in that way, you spread your risks around a little bit. If any one government goes crazy, some of your assets are still going to survive. If anything like a burglary or something like that happens, the stuff that can't be burgled, that will survive. So that's how you want to think about holding physical precious metals, by diversifying among the safest possible storage options while spreading them around in different places, so no one cache is at extreme risk.
We'll have more with John Rubino right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications, patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
You're listening to SilverRadio.fm.
Available online at HoweStreet.com, TalkDigitalNetwork.com.
Welcome back. We're speaking with John Rubino. John, silver miners, the majors, mid-tiers, juniors, your thoughts on them?
This is a really interesting time for the precious metals miners. Because, these big numbers we're throwing out, $5,000 gold, $200 silver, are completely unnecessary for the precious metals miners to be excellent investments. And that is because if you're a producing gold or silver miner right now, you probably brought your mine online during a time of lower gold or silver prices, which means you only brought that mine to production because you knew you could make money with, say, $1,200 U.S. gold or $15 silver. Well, now gold and silver are considerably higher than those prices, so your mine is throwing off a lot of free cash, which makes your company very profitable and increasingly financially stable because, all that free cash, you can use it to pay off debt, you can use it to raise your dividend, you can do all kinds of things that make your company more attractive to investors. And you don't need higher gold prices for that. You just need stable gold prices. So if gold and silver kind of sort of stay where they are, the big producing gold miners will generate lots of free cash, and they'll look better and better because of that as that cash builds up. And they'll start buying up the junior miners because, you don't want to, you can raise your dividends only so many times before it becomes so boring that you can't stand to even think about it anymore, right? You want to build an empire if you've got free cash flow. And that's what these guys will do eventually. They'll go out and they'll increase the size of their company by buying high quality juniors and adding the juniors' resources to the big company's resources. So that means the major miners will become interesting investments for, dividend investors, people like that. And their prices will probably go up in a stable gold and silver price environment. And the juniors will go up a lot because the major miners will buy them out. So it's just a really good fundamental time for investing in precious metals miners because wherever you look, the story is pretty favorable. And then you got that kicker where maybe gold will go to $5,000 an ounce and silver to $200 an ounce, in which case you're sitting on a bunch of lottery tickets if you own precious metal miners in that kind of a circumstance because, they can be 5 or 10 baggers very easily if you've got the price of the thing they're selling going through the roof like that. So, I personally own a lot of gold and silver miners, and with the one big risk out there that has to be recognized being a broad stock market collapse, which would pull down precious metals and the miners and everything. But, leaving that aside, it's a really good time for the miners themselves.
If there was a stock market collapse, would gold and silver bounce back faster than the markets?
Yeah. Well, they would definitely bounce back. You can't say for sure what the broader stock market averages will do, but if there's a big stock market crash, the governments of the world will respond with dramatically easier money. They'll cut interest rates into negative territories or further into negative territory, and they'll start buying back every piece of financial paper out there with newly created currencies. They'll just do the QE thing and the negative interest rate thing on steroids. And that's really good for gold and silver. If they've tanked, like if they went down by 50% in a brutal stock market collapse, they might go back up by 200% in the ensuing rise because of all the liquidity that governments are pumping into the market. So, maintain some cash. So if that happens, you can pile in. And for a little incentive, go back to March of 2020. Look at stock market charts for that month, especially for the miners, and see what happened. Stocks tanked, the mining stocks tanked, and then within weeks of tanking, they took off and they just rocketed up. I'm thinking of one junior mining stock that dropped from, I think, 8 or 9 to the 2s during that period. It just fell off the table. But then it turned right back around and went up again, and it's now at like 14. So you could have bought that stock at 2 and change, and in the space of a little over a year, ridden it up to 14. And that is not an unusual story in precious metals. So we could easily see the same thing again. So you want to keep that in mind as a way of making you a little bit more cautious than you might otherwise be in buying the miners, and also a little bit braver than you might be in jumping into the miners if they get whacked.
In the second half of the year, are we likely to see inflation, deflation, or stagflation?
Well, we've got inflation, and if the economy slows down a bit, we'll get stagflation. Deflation is not in the cards just yet, but with all the debt that we've got out there, and massive amounts of bad debt is very deflationary, and we've definitely got that. So, we have the capability in this economy. It's such a messed up economy that we could have any of those things. We could have inflation, stagflation, or deflation in the next couple of years, and any one of them could be completely justified by fundamentals. That's how messed up we are.
What could derail the story for silver?
Well, we talked about a stock market crash, and that could absolutely send silver from $27 U.S. per ounce today to $10. That could totally happen if stocks really tank. Another thing would be, we've got this kind of inflation-deflation dichotomy in terms of the overall economy. In other words, we could have an economy that grows while we inflate away the currencies. Or we could have an economy that collapses while all our bad debt is being worked off. And the 1930-style deflationary collapse scenario, which is still possible, would be really bad for silver. It's just not that likely a scenario because governments still have their printing presses. They won't, voluntarily accept a 1930s-style deflationary depression because they would be the guys who get blamed for it. They would be the Herbert Hoovers of this generation that, 100 years from now, we still know their name because they're the ones who destroyed the global economy. They don't want that. And the way they would lean against that is by just telling their central banks to create trillions and trillions of new dollars and dump them out into the system. So that probably would stop a debt-driven deflation in its tracks, just because no matter how much bad debt we have, it's still a finite number. But a printing press can create an infinite number of new dollars. So they can more than offset any amount of debt collapsing if they choose to, and I suspect they will choose to. Why not? It's all play money to them. It doesn't matter in the least, and if it saves their jobs for another couple of years, well worth it from their point of view.
Is silver a player in the manufacturing of electric vehicles?
Yeah, there's silver in your Tesla. Not a ton of it, though, just a few ounces. So it's a positive, but not a gigantic positive. A bigger driver for silver would be solar panels, because there's a little bit more money, per dollar that you spend on a solar panel, there's more silver than with an electric car. And the fact that solar panels are ubiquitous. We're slapping those things on everything out there, and they last about 25 years and then they get thrown away. And there's some question about whether the amount of materials in a solar panel make it worth recycling. I hope they recycle, and I think they probably will find a way to do it. But that's not a done deal. And with a lot of electronics, the amount of silver is so small that it's not worth recycling, so the silver is just lost. And if it was that way for solar panels, that would just be one more driver for silver prices, because then you have generation after generation of solar panels being torn off and replaced by new solar panels. And so the old silver's lost, the new silver goes in there and is taken off the market. Investors can't buy it anymore. And this just goes on and on. And we're going to put solar panels on everything. Solar is the energy source of the next 100 years. Forget about nuclear, no matter what they tell you. Forget about coal. Forget about natural gas. It's going to be solar. Even forget about wind. Those windmills are just too big of an engineering headache. But solar just keeps getting cheaper and cheaper year after year, and is going to reach, it's close already, but it's going to reach a point where it's just so cheap that, there's no reason not to put solar panels on any structure that you own, almost wherever you are in the world. And that's just going to drive a 100-year bull market in that technology. So as long as solar panels need silver, that's a great thing for silver.
Is silver being used in other clean technologies?
Yeah, solar, like I mentioned, and pretty much anything else that involves electrification uses a certain amount of silver, and microchips use silver, and so to the extent that cell phones are becoming ubiquitous in the world, but which they already are, but there's still big sections of the world that do not get cell service and don't have cell phones, and they will, and then we'll all replace ours. So, pretty much anything that involves microprocessors, which is to say everything now, uses a little bit of silver. So it's going nowhere but up, silver's industrial demand from here.
Are we likely to see any currencies backed by silver?
No. Highly unlikely, because it's an industrial metal, which means that there's a big fluctuation in the product cycles and the economic cycles that relate to things like silver and copper and iron ore. The prices can really fluctuate. With silver, that price will tend to trend upward, but it'll bounce around a lot. And also, there's just not enough silver in the world. I can't imagine the price of silver if they tried to make it a national currency or a global reserve asset or something like that. It's this tiny little market. It's a fraction of the size of gold, and gold is really small for being the basis of the global financial system. That's why people talk about $10,000, $15,000, $20,000 gold, because that's the price gold would have to go to be able to back the world's currencies. Now, to get silver up to a comparable total valuation, well, I don't know. I don't think you can do it. So silver is going to be something that trades in sync with gold, which means a higher gold price produces a higher silver price. But it's also going to be an industrial metal that is in demand for a lot of new things.
Are you personally buying, selling, or holding silver right now?
I have done my buying, and I am so loaded up on precious metals that if I showed my personal finances to a financial planner, they would probably suggest psychotherapy before they got dug into my actual numbers. I'm way overweighted on precious metals. So what I'm doing now is taking a little bit of profits on upticks for a lot of things, and otherwise just waiting. I think a lot of the stuff that we talked about will play out. Gold, silver, and the mining stocks will do very well over the next 5 or 10 years. And so that doesn't leave me with a lot to do. I'm already positioned, but I'm extremely, extremely long in precious metals.
John, where can people follow you?
Well, I run dollarcollapse.com, which is a website that is very precious metals oriented. So, it's got a lot of daily updates on gold and silver and the mining stocks. So stop by for an update or to put your email address on the email list, and then I'll send you whatever I write for free, and we will never, ever use your information or sell it or anything.
John, thank you so much for being on silverradio.fm.
Thanks, Jim.
My guest has been John Rubino, author of several books on the economy, including The Money Bubble, his website, dollarcollapse.com. If you have any questions for John or any of our other guests, you can send them to info@housestreet.com. I'm Jim Goddard. Thank you for listening.
Comments made on silverradio.fm are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at housestreet.com, talkdigitalnetwork.com. Silverradio.fm is a production of House Street Media Incorporated. Executive producer is Tom Allen.